Here's the SCO, a few more. Some of them are members of both. Here's the EEU, has a few more. Again, many are members of both. And you keep going, and all of a sudden, like a light bulb goes on. I said, that is Halford Mackinder's global island, what he called the world island. And this goes back early 20th century, first, probably greatest geopolitical theorist in history. Got to read his book if you haven't read it. It's pretty short, but he had this idea of the world island. That is exactly what they're building. Now, why is that important other than the obvious, which is more collective economic and population power? By the way, output of wheat, pick your metric. This dominates the world. Well, for one thing, if you're going to have a currency union, the more countries you have, the more likely you are to be successful. Mm-hmm. So let's just kind of digress for a second. And what are the headlines saying? Again, you correctly said, haven't we been talking about this for 10 years? Well, yeah, actually we have. But but in the past year, what are the headlines? China and Saudi Arabia are talking about selling oil for yuan. Brazil and China do large multi-product currency deal where they accept each other's currency. UAE, China, same thing. Selling oil for yuan. Russia, China, using yuan and rubles as payment methods for whatever they sell to each other. Russia sells natural resources, China sells semiconductors, manufactured goods, and so forth. And there are a number of those. I don't have to list them all, but there are 10 or 15 of these. The reason they've all fallen short, and very few of them have actually come to fruition despite the headlines, is when you have two countries and they're going to trade with each other and accept each other's currency, and you can do that, you're limited to what you can do with that currency.
Right.
And this is why the Russia-India thing is starting to break down. Russia's been pumping oil to India. India's been paying in rupees, but how much curry do you need? I mean, what's Russia going to do with all the rupees? And Russia's starting to balk. They're like, hey, we're up to our eyeballs in rupees. We need a better system. Well, when you have a multilateral, multi-country currency union, that problem goes away. Because now Russia sells oil to China. China pays in BRICS, the BRIC currency, pays you in BRIC. But Russia can take the BRIC and turn around to Argentina and say, we'd like to buy, or Brazil maybe, and we'd like to buy some Embraer aircraft. And Brazil gets the BRIC currency, and they can turn around to China and say, we'd like to buy some rice. And then China takes, et cetera. And so you've solved the quasi-barter problem. Mm-hmm. You've solved the problem of what to do with a pile of currency that you really can't use other than certain goods and services, but not everything you want. And there's an analyst who's brilliant. I read his stuff all the time. I'm like, man, you're so smart. And I just really follow him very, very closely and give him a lot of credit. But he came out a few days ago, maybe a week, and said he'd heard about this and he was kind of dismissing. He said, you can't have a currency union without a common fiscal policy. And I said, I don't want to mention his name, but I said, have you not heard of the euro? I mean, there is no common fiscal policy in Europe. Don't tell me that Italy has the same fiscal policy as the Netherlands, or that Germany has the same fiscal policy as Greece. They don't. They do have a central bank that issues the currency, has a little bit of gold, but not a lot relative to the size of the economy. But there's no common fiscal policy, and there's no common bond market. To this day, there's no such thing as a bond, I'll call it a Euro bond, backed by the full faith and credit of the entire European monetary zone. It doesn't exist. You can buy German bonds in euros, you can buy Italian bonds in euros, but you can't buy a Euro bond backed by all those countries. So they don't have a common bond market, and they don't have a common fiscal policy, but they do have a currency union that's very successful. So now back to the BRICS, they finally have the scale. They finally solved this problem, which I described, which kind of is not, when you get two countries, you're not too much further ahead than barter, but with 30 countries or 40 countries, you've solved that problem. So that's the background. Again, I want to just at the risk of repetition, I want to make 2 points. One, it's been 17 years in the making. It's not an overnight thing. They've replicated the World Bank. They've replicated the IMF. Now they're coming out with a new currency. Now, here's where it gets really interesting. And I tell people, I said, if you want to understand this, And it took me a long time to figure this out. I mean, I was just like slaving over it. But I said, if you want to understand this, you have to stop thinking like an American. You have to start thinking like a Russian. This is the kind of thing that pretty much only Russia could come up with. So what is the brick? And by the way, I don't know if they're going to call it a brick. I'm saying brick for convenience. It doesn't matter what they call it, but I just call it a brick for the time being. But they'll come up with a name. Who knows? The value of the brick is not determined with reference to any other currency. It's determined with reference to gold by weight of gold. Now, and I don't know the weight, they'll pick one, but again, it doesn't matter because it's not even, it's math, it's logic. And by the way, now we're back to Aristotle's transitive law. And this is the key. This unlocks the whole thing, because Aristotle said, you know, if A equals B equals C, then A equals C. The B can drop out. It's not even arithmetic. It's logic. It's called the transitive law. I'm certain that Aristotle invented it. If any Greek scholars know an earlier source, let me know. So what the BRICS have done is they have dodged the biggest bullet, the thing that caused Bretton Woods ultimately to fail, the thing that potentially stands in the way of all this. They've defined their currency by weight of gold. Now, a weight of gold has a dollar value, right? So A equals B equals C. One brick equals one, could be an ounce or a kilo, doesn't matter. Call it an ounce. One brick equals 1 ounce of gold equals today, 1970. Okay. Well, through the transitive law, drop out the B and one brick equals 1970, $1,970. But that's constant. I mean, that logic works for a moment in time, but it's not fixed because the price of gold is going to fluctuate daily or a minute by minute, right? So what's going to happen is the dollar gold, call it exchange rate, the dollar price of gold. So the LBMA, the COMEX, the London Metals Exchange, you know, JP Morgan unallocated forward contracts, the whole huge gold market in dollars is still going to exist. In fact, the BRICS want it to exist. And if I could just digress for 1 minute, Steph, I've never seen an international monetary economic problem with more, that has created more confusion. I won't say misinformation, that's a little trite, but just confusion or maybe deliberate hyperbole than this one. Because let me tell you what this is not. I'm going to tell you what it is, but it's important to know what it's not. This is not the petro yuan. This is not the petro ruble. This is not a gold-backed yuan. This is not a gold standard. This is not the end of the US dollar. It's not the end of the euro. It's not the end of the world. It's not any of those things, but that's what everyone's running around on websites or whatever shouting about. It's none of those things. In fact, quite the opposite. And this is where the Russian mentality comes in. The BRICS want the dollar to be around. They want the dollar gold market to exist, because they get the free ride. The dollar has to do all the dirty work in the gold space, and BRICS get the free ride by declaring one brick equal to a weight of gold. Again, weight's the key. They just let the dollar gold market go wherever it goes, and the brick is worth an ounce or whatever, kilo, whatever. And yeah, the dollar equivalent under the transitive law changes, but they're not pegged to the dollar. They're not fighting that fight. So this, I analogize this. It's like you're in your house, in the backyard, you know, your landscaper is like digging trenches and putting in plants and sweating and doing all this work. And you're sitting there with a glass of iced tea, enjoying the view. In other words, the BRICS get to free ride on the dollar gold system. And they want that system. They don't want it to go away because they get the benefit of a gold value. Now think of what the BRICS don't have to do in this scenario. They don't have to buy gold. They don't even have to own gold. They do, but no one in the world has enough gold to back a currency. This currency, the brick, will not be redeemable into gold. Now, maybe there's a dealer somewhere who will take it. That's between you and the dealer. But it's not like you're going to be able to march down to the People's Bank of China with a pile of bricks and say, give me the gold. They're not going to do it. So it's not redeemable. They're not going to make a market. They're not going to maintain a value because they don't have to, because it's by weight. They just get to sit back and piggyback on the dollar gold system and let the dollar do all the dirty work, with one twist. And here's the Russian contribution. So, so you don't have to close your capital account. You can close it, open it, whatever.